Well, with anticipation building about that Friday jobs report, volatility was sort of low on Wall Street today, and the markets end the session mixed, little changed. The Dow closed 18 points lower. The Nasdaq touched a fresh 13-year high before retreating and finishing the day 9 points lower. The S&P bucked the trend, closing fractionally higher on the day.
Joining us now to talk about all these issues, we're happy to have with us Mario Gabelli. He's chairman of Gabelli Funds. So, Mario, you heard all of the numbers that are being spouted, 215,000 jobs, 230,000 jobs. What's your number, and how important is it for you about your investing strategy?
We don't think about it because it's not an important element to focus on. What's important is the flow of the economy. The private sector is doing better. The consumer balance sheet's good. Jobs are getting better. Psychology is better. The investment sector, which is important, non-res is improving. Capital expenditures are coming in, and housing, I think, even with interest rates going up, will continue to do well, particularly single family. And then finally, Susie, federal government has slowed down, but state and local is vibrant. Receipts are good, and exports are better. So the economy is going to do well in 2014.
Are you going to give us a number on that job?
No, I don't have one.
You don't have one?
I don't do that.
It's not what you do. Some people are worried when they look at the first 6 or 7 trading days of the year and they see some stumbles compared with a month ago or what. Are you concerned about that, or is that just noise?
It's the January effect. You sell the winners in early January. You stop buying the ones that you wanted to window dress. The losers of last year become the winners in the first 2 or 3 days. That's background noise. I think the market for the year is going to have a decent year, up 3 or 4 or 5%, and that is very good. I was wrong last year because I said it would be up 5 to 10, and swoosh, it was up 30. And so
let you be that wrong again this year.
I have no problem in being wrong on that side of the equation.
So, Mario, you are a value investor. How hard is it for you to find value in this market?
Well, we look at lots of companies where we have core intellectual competence. So where our analysts look and where I sign them, we look at small, mid, and large caps, Susie, and there are so many yummies out there. We can find good ideas. Sectors that we've liked for the last 5 years. Last time I was on your show, we talked about commercial aviation, vendors to Boeing and Airbus. That is going to continue to be bright. Companies in that area include Curtiss-Wright, Crane, Precision Cast Parts, and so on. Energy is very vibrant. It's good for jobs in the United States. It's good for our competitive advantage. It's good for our balance of payments. It's good for our political stability. And companies in that area like National Fuel and Gas, like Weatherford, are two of those that I have culled through. Weatherford is at an all-time, is still bumbling on the bottom. Management's not done a good job of convincing the world they got to turn over. They have wonderful assets.
Last time we were together, you were talking similarly enthusiastically about the energy sector. You really see it as a transformative industry in this country over the next 30 to 50 years, don't you?
Tyler, I read things like the Inland Waterway and the number of places that are creating jobs on the rivers, like catalytic converters, like fracking, and technology, American technologies at work. It is a major game changer.
All right, you're known for doing a lot of media investing. Tell us anything in the media area that you're interested in. What are you watching?
Well, there's a whole bunch. It's content and distribution. Content is those companies that produce films, that produce, and there are more windows, particularly with regards to the mobile devices. Susie, there are 7 billion people, 3 billion mobile devices. Somebody will fill in the right number. They want content. So if you're Fox or Viacom or someone else on a global basis, you take it here, sell it there. This is terrific. Absolutely a game. So Viacom, Discovery Channel, too, I like. Among others, I own most of them, and they've done extremely well. But the distribution companies are also in favor. And right now there's a kind of a lovemaking in the works between John Malone with regards to what he's doing with Sirius to merge it into Liberty Media and use that as a currency to help him figure out what to do through Charter with Time Warner. And Cablevision's kind of the perennial attractive company in that regard.
Do you see those large integrated cable companies, some of which are both content creators, like Comcast or Time Warner? Well, Time Warner Cable has now been spun out of Time Warner, but some of which are content creators as well as distributors, as well as telecom companies. Do you see that business model enduring, or will eventually some of those companies break up?
You know, 1973, that was called the Primetime Access Rule. The broadcasters controlled the programming on primetime, and they had to spin them off. That's how Viacom got created, okay? Time Warner Jeff Bewkes went the other way. He spun off his cable, kept content, stocks cheap, interesting, and they're spinning off the publishing business. You have Comcast going the other way, buying from GE the balance of NBC. The answer is in a free market that we have in this country, managements could make mistakes. They could structure their balance sheets, and they could make opportunities. It's a good bet. So far, both Time Warner and Comcast have been winners.
You've been saying that this could be a very good year for acquisitions. Besides this whole Time Warner love fest that you're talking about, what else? What other tips can you give our viewers?
Well, I don't like to give tips, but within the context of what I like, financial engineering, of which companies spinning off companies. For example, Time Warner finishing off the publishing business. There will be a lot of spin-offs. National Fuel and Gas has a model out there called One Oak where they're spinning off the utility business. NFG sells at $70, Susie. If gas stays at $4 an MCF, natural gas, this stock can make a 50%, and it's a utility with wonderful assets in the Marcellus area and in the Utica area. So other companies like that would be mergers of Pep Boys in the auto parts area. Federal Mogul, as an example, would split up in two parts eventually. They will split. Carl Icahn owns 81%. Our clients own a piece. And everything I talk about, our clients own.
I hope everybody was taking notes on all of this. A lot of good information, as usual. Thank you so much, Mario, for coming on the program.
Great to be here with Tyler and yourself, Susie.
Nice to see you, Mario.
That's Mario Gabelli of Gabelli Funds.